Hello and welcome to another episode of All Things Money. I'm your host Fatima Attarwala, and with me today is Kalsoom Lakhani and Misbah Naqvi, co-founders of I2I Ventures. Hi Misbah, hi Kalsoom. Welcome to my show. Now I understand there's I2I Ventures and then there's Invest to Innovate, and they both have its own history. So maybe you could just walk out what led to Invest to Innovate, what led to I2I Ventures, and what are the plans today?
Sure. So I founded Invest to Innovate in 2011. I was, diaspora Pakistani, grew up here, but, living outside, and was really thinking how much potential Pakistan had generally. But every time I was meeting young entrepreneurs when I would come here, I was always blown away by how amazing they were. But then when I would meet them a couple months later, nothing had happened with their businesses because at the time, there was really no startup ecosystem to begin with, but there was really no support for them, right? No mentors, no investors. And at the same time, I was going to these conferences and things like that. And I was meeting people that were like, entrepreneurs? He's like, I want to find them, I want to invest in them. And that's actually a shout out to Yusuf John, who was, I think, one of the old original angel investors here in Pakistan. And so that really sparked the idea around Invest to Innovate. I, at the time, was actually blogging a lot about Pakistan and all the potential that there was, and so decided to launch Invest to Innovate then, just to first start by saying, how do we just support amazing entrepreneurs, and not just in Pakistan, but in some of the most hidden places in the world where you don't expect that, right? And so I2I really believes that Invest to Innovate really started with the belief that the next great innovators aren't coming from Silicon Valley, they're coming from markets like Pakistan, Nigeria, Vietnam, but they need the support to help unleash that potential. And so when we started, I was just starting something, and then everything that's come since has been a response to a problem that we saw. So we started Pakistan's first startup accelerator program, which really helps businesses that already are at post idea stage really kind of grow from where they are, and connect them to investors and mentors and all of that. We started that in 2012, which was the same year that the Punjab Information Technology Board launched Plan 9. Since have scaled that. So the team at Invest to Innovate, we've scaled that work of working with founders and entrepreneurs. We've worked with over 1,000 startups, both in Pakistan as well as in the region. We've trained over 250 incubators and accelerators. So as we became a program, we realized that there was a lot of transferable knowledge there. So became the trainer of the trainers. So have worked with over 250 incubators and accelerators in Pakistan, but also in the Middle East, Southeast Asia. And then, we started to put out research on what was happening in Pakistan because we realized people outside looking in needed to understand what was happening from a data perspective of, benchmarking what was happening in the Pakistani startup space. So launched the first startup ecosystem report in 2014 and just recently launched, I guess, on the 10-year anniversary, the most recent one. But we have been doing that for the last, 11 years. And then the fund happened because as a founder, I was just kind of building for the problems that I saw, but I don't have a traditional background in investment. That traditional finance path was not something that I had. I have a master's degree in conflict resolution, which actually, ironically, I use as an investor a lot now, but I never thought of myself as an investor. I was just someone that was constantly connecting founders to investors. And then, other people kept saying to me, and I also saw so many bad investors that a lot of founders would meet that wanted to take a lot of equity in their companies and really kind of, really honestly, a lot of businesses died because of that. And so I really saw the injustice in it, realized also by having this front row seat to building the Pakistani startup space, knowing so many founders at that point, that I actually had a really unique vantage point as a potential investor. And so I didn't want to do it alone, which is how, Misbah and I have known each other for 16 years. She was on my advisory board with Invest to Innovate. She has also a nonlinear path to this, but maybe slightly more linear than me, but didn't want to do it alone, wanted to do it with someone I trusted, and so convinced her to join me in launching I2I Ventures, which is an early stage venture capital fund. So we opened the doors to that in 2019, and I realized I couldn't do both, so I hired a CEO to continue running Invest to Innovate. That's actually now run by Sarah Munir now. And we consider ourselves sister concerns. So the fund I've been full-time on the fund since 2020.
So we had this period of VC boom. There was this whole seed money coming in. That was true globally. I think there was a lot of money. And then when it crashed and burned, it really crashed and burned. A lot of startups, a lot of household names went belly up, again, following the global trend. Globally, I think some of the startups, some of the VC funding has renewed. What is it like happen? What is happening in Pakistan today?
Yeah, I think what, unfortunately, like you said, there was a global slowdown. And, I often say that we were at the beginning of our cycle. And as you know, venture works in cycles. So you invest for a few years and then you start getting returns into the fund. And as you get returns into the fund, people get validation of the reason why they invested in the first place. You make money, investors make money, founders make money, and there's a general sense of like, okay, this works in this market. But unfortunately for Pakistan, because we were still at the beginning of that trajectory, and we hadn't completed a cycle where investors saw money coming back, founders were not able to build, really, they were building high-growing companies, but they had not been able to manifest a lot of that growth yet. And so what happened when the global slowdown happened was like, money went away from Pakistan as well, international funds at least. And so what the impact that was felt in the local market was that suddenly there was a dearth of capital and startups were not able to raise the way they had been raising in the prior years. And what that meant was that there were also people that questioned whether or not this works as an asset class. And so that kind of a bit of a negative perspective came in where people were like, I don't know if this actually works because I haven't seen any money coming back in my investments. It's already been like 2 years or 3 years. Whereas we in the venture space know that venture is a long-term business. Of course, there were some years where when there was a hype cycle and there were returns coming back very quickly. When you look at markets that are more developed like Silicon Valley, you saw companies growing and becoming unicorns in like 2 years, IPOs happening in 4 years. But generally, if you go back to basics, that cycle is longer. And so for us in Pakistan as well, we're at that stage now where now the cycle is like 4 years in, 3 years in, 5 years in, and we're going to start seeing returns coming in. But if you take a step back and look at the market itself, you'll see that the kind of money that startups have raised has fallen over the last few years. In the first years when the money was growing, like we saw startups raising 5 to 7x more than they had in the prior years. Like we had $40 million raised, $60 million raised, and then we went up to $350 million, which continued for a couple of years, and then it fell off again to like in the 70s, and lower than that. And so I think where we are today is that startups are still focusing on growth. They're still being able to raise funds, but the mindset has changed in terms of like how quickly companies are being able to raise money and how much money is available for them as a pool to access.
So what space, if you were to go back and look at all the ventures that you had, what space would you wish that maybe you would not have entered?
I think, and again, hindsight is, 2020,
yeah.
Of course. And I think when you look at even globally, especially at emerging markets, you just see every investment fund kind of make very similar decisions. There is pattern recognition that exists, right? And I think in this first wave of startups that were coming up in emerging markets, you basically saw the same kinds of companies coming up around the same time.
So you had all these delivery companies. I mean, there's just this big a pie. All of them were trying to say, okay, 20 minutes, 15 minutes, 10 minutes. It's not possible in Karachi. It's not going to work.
It's not even about the time about it not being possible, right? Because from an infrastructure standpoint, we think about logistics, but it's also about, is there a need? Do users in Pakistan, do they care about how quickly they're getting their groceries, or do they care more about the price of their groceries? And I think, so things like that where, I think originally when we were investing, we were looking at other models, a lot of things that were coming up. So that, there was a huge, as Misbah was mentioning in 2021 and 2022, the pandemic and interest rates being down globally really brought this flood of international VC money into Pakistan for the very first time, right? So we saw this huge inflation of just a lot of capital that came in. And then you also saw, as a result of this like push and pull of founders that were saying, oh, there's all this money coming in, I'm going to build a business. And we also had the Kareem acquisition happen at the same time. So there was just a lot happening at the same time. And so we saw a lot of capital intensive businesses because there was a lot of capital to work with, right? And so we saw a lot happen in the B2B e-commerce space, grocery delivery, but also quick commerce came up a lot. Ride hailing was really big. And so all of these capital intensive businesses that I think, hindsight being 2020, not always the best from a bottom line perspective, but in terms of growth, you can show a great top line, right? And I think, we actually, I think we're quite good about not buying into the hype cycle always. And so there were companies that, shall not be named, that raised a lot of money and have since gone under, that we actually didn't do because, as you mentioned about quick commerce, we just had a thesis that we didn't believe that Pakistani users cared about that as much as they cared about the cost and value of what they were getting. And so instead of investing in a quick commerce deal, we invested in DealCart, which really is focused on, value for users, and especially for users that are transacting online for the very first time. And we're laser focused on, getting to unit profitability from day one, right? That was their focus. So, obviously now sectors that are exciting, which we at the time weren't when we first started investing, was the financial technology fintech space, right? Because back then, the regulations were actually quite onerous at the time, but have since opened up, right? And so as a result of that, fintech has become a really exciting sector in Pakistan. It's actually, even today, Misbah was mentioning numbers have come down, but in, year to date in 2025, startups have raised $58 million in funding, and $52 million of that was from Hubble, which is a fintech here in Pakistan. And a lot of that was, debt that they raised, but it's a significant deal, right? And so fintechs are great because it's, a lot less capital intensive in terms of scale. You can see that. We can also see from patterns that's really what brings venture returns in other emerging markets. So it continues to be a sector that I think we're very bullish on. But I don't know, there's definitely mistakes that we've made, but I think we learned from those mistakes. So I don't know if I would change anything necessarily.
Yeah, I think on fintech, I will say that we've always been bullish on it, but the opportunities have been evolving as, like Cal's mentioned, like the State Bank has come in with regulations with regarding RAST, for example. And then RAST allows those rails for fintechs to come in and build on top of. I think what, traditional banks have often looked down on, like, startups and fintechs being like, how are they able to, achieve growth when we haven't? But banks are also distracted about, by lending to the government, lending to large corporates, blue chip Pakistani local companies, and so especially in a high interest rate environment, the capital gets pulled towards that. So fintechs find a really good opportunity to come in and serve the unbanked and underbanked, right? And that goes both for individuals as well as companies and SMEs, etc. So I think that will continue to be a sector that we're excited about. At this point, close to 30% of our portfolio is related to fintech related in some way or the other, whether it's payments, whether it's committees, whether it's getting women to, building products that are actually focused on women as consumers, because that's a huge market as well as SME lending and earned wage access, etc. So for us, that has already been exciting. And then as RAST is coming in now, with P2M coming in RAST, and more solutions being built on top of that, to enable electronic payments, to enable a more seamless exchange of value, we think there'll be even more opportunities to build in that. The other thing I will say around that space is that you have fintechs which are pure fintech, which then again, if you're lending, are able to make money relatively quickly. And then you have embedded finance. And we're going to see more and more companies that are, maybe their sector is not finance, but they recognize the opportunity to bring in embedded finance into their own business model. So I think you can be finance adjacent or fintech adjacent, but be building in the e-commerce space, or be building in the logistics space, or be building in the education space. So we're going to see more of those. And I think that's something that we keep looking at as well.
There's a US investor, Angela Strange, that actually said that every company will become a fintech one day. And so I think that's very true, and especially when Misbah was talking about embedded finance. And now with everything happening with AI, every company will be an AI company, because everyone is layering artificial intelligence in some way into what they're building. So while that is a really big space, I think we're seeing that with all of our companies are building some sort of AI layer into what they're building.
So we have talked about AI, we have talked about fintech, but I think if you would be able to comment on crypto, because crypto wasn't a thing in Pakistan, not at a regulatory level, and now it's just everywhere. So, there was a very high crypto adoption rate, but it was just kind of ignored. Now it's very much there.
Legitimized.
And I think, it's legitimized, and I think the whole Trump rally has also led to it. The new crypto highs have also led to it. The Bitcoin rally has led to it. So has that in any way affected your startup decisions or your funding decisions, or do you see startups coming in around this space?
We haven't invested. I mean, there are companies that are obviously coming up that are leveraging. I think when we looked at things a couple of years ago, so obviously there's been like booms and busts already, obviously in that space. When things were getting really hot in the crypto space, we saw a couple of deals that were kind of the on-ramps for people getting onto and being able to trade in crypto. And so there were a few deals like that we didn't.
Is I2I financing any of those?
No, we're not investors in any of those. But right now, I think especially you were just mentioning about the Trump administration in the US, obviously with the Genius Act that just got passed in terms of what that means for stablecoin, that's really interesting for emerging markets, especially for markets where currency fluctuations are a challenge. And so being able to have a coin that is pegged to the US dollar in some way rather than obviously PKR, which is a little bit more volatile. I think we are still looking actually, because I do think that's a space that we're quite interested in, but I do think it's interesting that a number of our fintech companies are actually talking about it. So companies that we're already invested in, thinking about how they're potentially layering things like stablecoin into their offering.
And I think there are probably two categories I would put that in. And we've been talking to the State Bank as well because, as you know, they recently announced a regulatory sandbox, and I think they'll be opening applications soon as well. And they've been talking to a number of stakeholders, both like investors like us, but also startups and practitioners in this space. And there is a real interest to regulate crypto. And I think for them also stablecoin is a much easier pill to swallow and expect to
Just for
allow to
general
build
audience,
it around.
what is a stablecoin?
A stablecoin will be
USDT, Ether and all that,
will
right?
be something that's actually linked to the US dollar, like Kalsoom said, rather than another random currency or a local currency, right? So there's some level of stability over there, as the name suggests, because you are like linked to an actual currency. And so what we've seen in our portfolio, and also companies that we've been speaking to outside of our portfolio in Pakistan, is that if there is a crypto exchange coming in, there is a role that could be potentially be played over there in terms of the players that help bring it online. And then there's also a potential to link stablecoin with payments. And then how do you actually build that into a payment sort of environment? Still very early, lots to be seen. I know that there's conversations happening at the Crypto Council level in terms of what the infrastructure should look like. So I think a lot of us are like cautiously optimistic and tracking what is being done in terms of regulating the space. But like you said, on an individual level, Pakistanis have had a lot of exposure to crypto, individual investments in Bitcoin, even though they have not been allowed to make those investments. It's not been illegal to hold crypto. And so this like kind of loophole is where people have taken advantage of it. And so I think we'll find that once the regulations come in, you might see adoption really, really quickly because there are a lot of people that are already very comfortable with the idea of crypto.
So crypto, AI, fintech, they're all adjacent to one another, and then over the next 5 years, these are the areas that you see the most potential in terms of startups, in terms of funding.
Yeah, it's what the world is moving into. I mean, especially with things like AI, but also beyond like crypto. Crypto is like part of this broader blockchain, right? It's like all this idea of the world being deeply interconnected with each other and just being able to move without thinking about borders and regulations and all of that. And obviously different governments are more friendly to it than others. But I think that is the present, it is the future. With AI, it's been the present for some time. So I think right now we're just seeing it evolve so exponentially that I think every company at this point, to what I just said recently, is just that it is going to be an AI-enabled company in some way. From a deep tech perspective, whether or not we've seen a lot of AI-first companies come out of Pakistan yet, that I think still remains to be seen in terms of from a skill set perspective, like what we need to kind of help this younger population really be able to build from it and basically leverage large language models that already exist in order to build really interesting innovations. We have not seen that yet, but I don't think that we're far off from that happening.
In Pakistan, what potential do you see given our skill set, given our limited infrastructure, given that we still have internet disruptions? So in that space, when you talk about fintech, you talk about AI, when you talk about crypto and stable, it all assumes that we have that infrastructure in place. So what are the regulatory challenges do you see these companies facing?
Yeah, I think that's a great point, Fatima, because as much as we all drop those numbers, right? Like fifth largest market in the world, 70% of our population under 30, over 100 million broadband users. When you actually start going under all of those headlines, you do find internet disruptions. You do find lack of quality internet in a lot of areas of Pakistan. You do find that the broadband users are very concentrated. The 100 million may have a lot of double counting in there. So all of that is there. Those challenges are real and they're there. And we do know that the government and at the IT ministry level are also taking initiatives. I know digitalization is a big priority for the government at the moment. And I think we all on the investor side and the startup side really support that, because I think that's something we can all get behind. But you do have technological challenges. We do want to see that infrastructure being improved. We do want to see telcos being treated with the kind of, being given those opportunities to grow as they have in other markets. That's something that we can give input on and talk about and lobby around, but it's not something that's in our hands. So in some ways, you have to work within what you have. And I think if you talk about, yes, there's an opportunity to build better infrastructure, and yes, all of that needs to be done. And also we need to be really clear about, if you're talking about taxation, which is a need, we totally understand why the government needs to actually raise revenue that is coming into the government. You also need to understand that if you're talking about digitalization on one hand, and you're imposing a tax on electronic payments on the other hand, that kind of is a bit of a hard pill to swallow for a lot of people, and that you need to sort of come together. And I think I'm really happy to see that the government has sort of been open to taking back some of those earlier announcements that were made in the budget. But having said that, if you work within what you have, I still think there's a lot of opportunity here. I still think that we are tech first. Like we're talking about the majority of our population being tech natives. People that are now in their 20s are tech native. They're like work with technology in a very different way than those of us who are like, I'm in my 50s. And so my adoption of technology is very different. It's not representative of Pakistan. So I think that we will see people building solutions for our market within the constraints, of course, of what we have. But we'll also see, this is a back and forth, like we are seeing regulations opening up. We are seeing some good initiatives being taken by the government. And I think the push and pull that Kalsoom was talking about, I think in markets like this, it's very, very important, because there's only so much that the government can push. We saw in COVID that technology adoption sped up because people were able to order things online because they had to. And so this comfort of ordering online with e-commerce became better across Pakistan. And that's where the customer pull comes from. Once you start doing transactions online, you start paying online, you're like, wow, this is a lot easier than carrying cash. You start demanding more of that. So I think that push and that pull in terms of the government pushing certain things and the consumers asking for certain things will continue. And I think there is a lot of scope to build for the market. We were talking about sectors and spaces. While we talk about AI and fintech, if you just take a step back and look at all of the opportunity we have in our market, we have such a large population, we have a young population. Their needs for transport, for clothing, for groceries, for education, for healthcare is only going to keep increasing. And we need people building those solutions for those companies. And something that Kalsoom and I have been talking a lot about is that we're starting to see adoption. There was this model of like, okay, let's take what's worked in Silicon Valley and adapt it to Pakistan. And that was fine, because why not learn from people who've done it before? What we're starting to see more and more is emerging markets learning from each other. So Pakistani founders learning from someone that's built a fintech in Nigeria, which is a very similar market, or someone that's building an e-commerce company in a similar way that's been built in Egypt, which is a similar market to Pakistan. So I think we will see more of those learnings come in, and the adoption of models that have worked in other emerging markets are much more suited to Pakistan. And so I think we will continue to see a lot of activity around people building for our market. And as we also often say, we will also see people building in Pakistan for outside, because we do have an advantage when it comes to labor value. We do have an advantage when it comes to technology, and we have amazing developers in Pakistan. And so we'll see people doubling down on that more, where Pakistan can become a hub for people that are building from Pakistan for the world outside.
So it's my understanding that I2I there are like what, 6-7 ventures in Pakistan, and I2I is one of them, right?
Venture funds, yes.
Venture funds, right? So if I was an entrepreneur and I wanted to come pitch to I2I, what would you be looking for in my pitch? What advice would you give to entrepreneurs?
So, I mean, I think we're pretty clear on our website what we look for. You can also see in our portfolio, right, the kinds of companies that we like. Obviously, venture capital as an asset class is very specific in terms of the types of returns that you want to see. Unfortunately, it doesn't fit a lot of companies that want to raise funding, and I do think that that's a challenge from a supply side of capital in Pakistan. I think we need a lot more types of funds to exist in this market. But for venture capital, you specifically want to see what we call a hockey stick style growth. So you want to be able to see companies that can grow quite fast, and that obviously often includes technology as a way to kind of enable that growth to be really fast. So if a company was to come to us, I think the first question that we'd see is like, is this a fit for a venture capital play to begin with? Secondly, is it a fit for us? And I think Misbah and I are quite aligned on, the very first thing that we care about is, do we like the founder, right? Is this founder someone that demonstrates grit, which, grit, Angela Duckworth talks about this in her book, but grit is the confluence of passion and determination, right? And in Pakistan, I think we have people with spades of grit because it's a market where not everything works all the time. But we want to see that demonstrated, right? We want to see that there's integrity with the founders, that they are thinking big, right? So if it's a very niche business, it's probably not going to be a fit for VC anyway, and then specifically for us. So you're trying to address a really large problem. So founders are really important because it's also about founder market fit, like in terms of, is this founder the right person to be building this business? And then if they have initial traction, right? So there are some VC funds, some of our colleagues in the market that do take bets slightly earlier than us and invest at what we call pre-seed, right? So sometimes even before there's any proof that this business can succeed. For us, I think our comfort level, we have done some deals a little bit earlier, but oftentimes our comfort level is really when we've seen some initial traction from the business side that is proof that there is going to be more traction in the future, and that's called seed stage, right? So we typically enter at that. That's where we are agnostic in terms of what we invest in. But what I always encourage people to do is when you go to our website, look at the companies that we've already invested in. If you are going to be a competitor to that, we likely won't invest in you because that's also a disservice to you. It's a disservice to our companies if we're investing in competitors to each other, right? And so we're very hands-on as investors. We come in and we really like to roll up our sleeves, and a lot of that is because of our personalities, but also my background and the DNA of what I built with Invest to Innovate and being very, founder-driven before. We really like to support our companies in hiring, connecting them from a market perspective, connecting them to funders, helping on operations. Like we kind of do everything. We call ourselves a 24/7 shop because of, me working a lot of times in the US and Misbah being here. It's like you can send a WhatsApp message any time of day and we'll probably be there to respond.
At any point, entrepreneurs resent that you're coming in too much in my space and I don't agree with you and I don't want to listen to you, but I have to because you're the investor?
I think that's a dynamic that's, first of all, it's really important to build trust with your founders when you first come into the business. And I think we're in a level of respect, right? So we try not to be that type of onerous investor that believes that we know more than you about how to run your business. We don't want to run your business for you, right? We do have a perspective that we think can be, can matter and hopefully can be factored into a decision. But at the end of the day, it's going to be your call about whether or not you make that decision or not. If it's a really bad decision and we're on the board, obviously we'll make a thing about it, but that hasn't happened yet. But I think if you have founders that really trust you and you're in their corner, they see you more as their allies rather than people that are going to be coming in and try to take over, right? And so that's not our MO. It's also the reason why a lot of founders that we do invest in, a lot of our founders talk to other founders, right? So that is our reputation in the market, is that we are really founder friendly, and we don't just say that, we back it up with what we do after we invest. And so founders know that when we come in, if they need support, we are there, but we're not going to be always hanging over them to ensure, something is done the way that we want to, because that's not why we invest.
It's also not the nature of venture capital by definition, right? We come in really early, but we're also minority investors. And most venture capital investors will be between, 3 and 15%, for example. So still very much minority. And I think like Kalsoom said, I think for us it's founder driven in terms of how much they want to engage. We do have regular check-ins. We're always available on WhatsApp. There's a certain level of reporting that is required for good governance. So we do definitely push on that. But then we're not sort of breathing down their necks, asking them to do something in particular. We're much more of like, let's talk about strategy. Let's help you with business development. Let's help you with talent. And where can we actually add value? Having said that, there are times when we've sort of pushed back on certain things where we feel like maybe we have a different perspective, maybe we have some exposure to something else that the founders don't understand. And I think I'm really proud of our relationships with our founders because it's been built over years of trust, and that's the mutual respect is the first part of it. I think as far as like WhatsApp and being available, it's more us being available to them as and when. And honestly, when you get a call from a founder at 11:30 at night who wants to share some good news with you, that's a testament that you're doing something right.
And that
we're
feels
very
like a
proud of that.
privilege. It's a privilege and an honor to be able to be on that side of it rather than being, and we get the bad news too at 11:30 at night, right? So it also feels good to know that if something bad is happening, we're going to be one of the first calls, because it's important for investors, especially, if you have outside investors that aren't Pakistani on your capitalization table, on your cap table, oftentimes they don't know the nitty gritty of the market, right? But because we do, it's helpful to know that we always kind of are aware of things as they're happening and not hearing about it too late, right? So I think that's important as well.
Earlier in the conversation, you said that you saw a lot of injustice about how investors were investing and how the entrepreneurs were giving up too much. So how can entrepreneurs protect themselves from investors who don't think like you guys?
I think I have so much to say about that. But first of all, I think a lot of founders, when they come to an investor with an idea, first of all, I think there's too much tied to funding. Like we see funding equals success, right? But what I always say to people is, I don't raise investment unless you really have to raise investment, right? Don't raise investment just because from a power dynamic perspective, you want to be able to go to an investor when you have something to show, when you can actually really prove that the business is working, and then ideally have a good dynamic there. The second thing that I'd say is that, it really is a marriage. Like you're getting, as Misbah mentioned, we get in early with a company, we're going to be with you for a couple years. So if the dynamic is off, or you feel like it's someone who's going to be really onerous and tell you what to do to the point of what you said, what some bad investors do, that's a red flag, right? I also think it's really important for founders to speak to one another, right? Sometimes it's hard in Pakistan when people feel like entrepreneurship really is a very lonely journey. Sometimes you feel very siloed in what you're doing. So number one, I think sometimes being part of these incubation programs and all of that is great to be able to kind of get other feedback from people of, is this right? Is this something I should be expecting? I've had so many founders, and I'm sure Misbah has as well, who I'm not even an investor in, reach out to me because they had a deal come, and just because they know that I'm someone that will pick up the phone, and they're like, I just got this deal. Do you think this is a good deal or not? And I'm not even an investor. I have no interest in this company, but I will give them the advice, right? And then the final piece of advice that I give to people is that if you're speaking to an investor, just as much as we're doing our diligence on you, do your diligence on the investor, right? Speak to their other portfolio companies, see how they behave, all of that. So less even about the deal itself, and what happens after the deal matters even more, right? So doing that type of diligence, I think, helps save some founders from getting into really tricky situations.
I think to your question about what can they look out for and how do they protect themselves, just to add to what Kalsoom has said, I think one thing is understand the finance of it, understand how things work, understand how equity works, understand how debt works, get a legal counsel to review your documentation so that you're not taken by surprise. So go into a conversation, it's a negotiation for sure, but go into it understanding your rights as a founder, and what the numbers mean. If you are asking for, if your valuation of your company is expected to be 5 million or 10 million, and you're raising $1 million, what does that mean in terms of dilution? What is the concept of dilution? What are some of the terms that you should look out for? Those are things that you can go in prepared, and not necessarily be taken by a ride by someone who's a bad faith actor. So I think that's important as well, and those are things that can be learned online. There are free resources. There's incubation NICs and other incubation programs often hold seminars and webinars around these things. That go and participate and understand how the market works in the context of raising money and giving away equity, so that you know where you stand when you get into it.
And I think just the last thing I'll say is that it's really important to understand that, especially if you're raising VC style money, the reason why dilution matters is that, yes, you might be giving up, 30% of your company today, but you're going to continue giving up equity over time, right? And so you don't want to, if your company eventually, inshallah, has an exit and you have 5% left, right? That's why that first round actually does matter, right? And so the dilution is something that matters over time. And I think the challenge in Pakistan sometimes with first-time investors is and because we also haven't had those exits, and we have people that really don't understand the concept of raising multiple times, that sense of that is because we have a lot of states that have generational companies, they never give up their business, right? And so they're only thinking about this one round, they want to take 80% of the company, right? And so, I've definitely seen that and happen. And so I think it's really important to understand.
80% of the company?
I've seen that, we've seen all kinds of stuff, right? And so, but the important thing for you to understand is not just what is happening today, but what does that mean in terms of future? And I think that's something that not a lot of founders think about in the first round of funding.
Great. I think that's a lot of food for thought as to how entrepreneurs can protect themselves from more predatory behaviors. But I think what I got most from this conversation was that going forward, crypto, AI, and fintech, those are the possible verticals, the growth areas, and maybe our startups, our entrepreneurs can focus on. And maybe that's where globally VCs and other investors are looking at, and locally as well. Thank you so much for coming to the show. It was a pleasure having both of you.
Thank you for having us.
Thank you for having us. It was a pleasure being here.
Great.